I think it's almost impossible in the bond market. We see negative yields in many developed markets, and we know 7.5% is not possible to attain from a negative yield. We know that as well in terms of the 10-year Treasury market at 1.8%. 10-year Treasuries, to duplicate the 30-year history of bonds, would have to drop to a minus 15% in order to, produce returns of that magnitude. You can add 3% equity premium to all of that and basically come to the conclusion that if a 10-year Treasury at 180 is going to yield 180 for the next 10 years, and stocks with a 3% equity premium would yield 4.8 or 5% in terms of total return, then the markets are entirely different, and it would pay to travel to Mars as opposed to stay on Earth, because the returns here are very, very low.
The implications of what you're saying, Bill, are, already the pension funds in Europe, they don't know what to do. They are terrified. What we are at a moment, we talked earlier in the show about, okay, are the car companies watching their lunch get eaten right now by new entrants to the market, different business models, different use of cars? The pension system and the investment system in this country and all over the world is buckling as a result of this. How is this going to shake out except it being ugly?
Well, it is ugly, and that's one of the reasons that pensions are one of the business models that are being affected by low to negative interest rates. They have promised 3 or 4 or 5% in terms of death benefits and other relatable liabilities. Now they can only earn 0 or 1 or 2, and so slowly they're at the margin, they're going bankrupt. The big insurance companies will not go bankrupt, don't misquote me, but basically they're hurting it, like you suggest. Same thing with banks in terms of their net interest margins, and same thing basically with household savers. If they can't earn more than 0 at their bank, then how can they pay for education? How can they pay for retirement? So low and negative interest rates at these levels are producing lots of problems for business models.
This predicament, in your view, is a direct result of?
Well, it's a direct result of central bank policy. Admittedly, it was necessary to lower interest rates from 5.25% by the Fed in 2008-9 to down where we are, but ultimately they have to move back up. And I think a certain number of Fed governors, realize that the normalization process is necessary in order to save, business models and to save capitalism, basically, because capitalism doesn't work at 0% and it doesn't work at negative interest rates. And so, we're moving back up, but we have to do it gradually based on the leverage inherent in the system.
That's a really interesting thought.